And lastly, African countries have been called upon to restructure tax and other investment incentives directed to foreign direct investments to ramp up on-source revenue generation and cut back on foregone revenues. This is after the ongoing Tax Justice Network Summit in Accra, Ghana, reported that the continent cumulatively loses $220 billion in tax incentives advanced towards FDIs, and the United Nations Conference on Trade and Development, that's UNCTAD, reported Africa's losses to illicit financial flows to be at $80 billion annually by 2020. Key avenues of loss of the revenues are base erosion and profit shifting done through unfair and non-compliant financial reporting of FDIs.
In the words of my fellow director, who is...
Please see some smiles. For those that would like to be part of the back on the stage. So at this juncture, ladies and gentlemen,
this happens in all our countries, where a company, international company, comes to our countries, operates, makes profits, and declares no profits because of the accounting rules that they can take advantage of to book their profits in other countries. So they'll have a subsidiary in some other country, might be in Switzerland, wherever it is, and book their profits in those countries. So essentially they'll operate for 30-40 years in a country with no profits, and therefore they cannot be taxed. So what it means for Africa is, as the AU has said many times, is that our domestic resource mobilization is too low. So in this IFF issue is really about how can Africa develop by making sure that economic actors who come into Africa benefit the local economies.
And that's where we wrap up the business news. My name is